Interbank Performance for 2021. We have earnings season and we have seen the annual performance for 2021 is being showcased, and most of the financial institutions in Qatar and across the Gulf has already published the results. I'm going to dwell on those results, how the Qatari banks have performed, how Doha Bank has performed, and what are the initiatives they have taken for 2021. What about UAE banks or Omani banks, Kuwaiti banks, and how is the overall banking system has responded. And also we'll look at oil price, the inflation in the Gulf, Fed action, and fees and commissions, NPL management, and the overall fundraising plans which most of the financial institution has got. As far as Doha Bank is concerned, the net profit for the year 2021, 704 million after taking additional extraordinary provision during the year. It's more of a precautionary provision, you can say. Post-COVID, the government has extended the incentives for small and medium-sized entrepreneurs or affected sectors, loan installment, interest rate postponement, etc. and etc. Those incentives will cease. The market risk is there, definitely across the globe, across the region, and Qatar as well. Sectoral risk, the affected sectors. What happens to the real estate valuation? What happens to the shadow real estates in terms of service sectors, where definitely the construction financing is involved, real estate is involved, but the services for hospitality or schools whatsoever. So what happened to those? With this perspective in mind, we maximize the provision as a prudent measure. Regulators have suggested, as well as our board has consented to it. The choice was very clear. One is IFRS 9. Over and above IFRS 9, would you like to absorb more provisions? And that's what precisely we did it. It's better to have a healthy buffer post-COVID. So in case if there is a shock in the systems, we can absorb it. The net interest income significantly grew by 11.4% as compared to last year, 2.6 billion. Net operating income, more than anything else, stood at 3.1 billion, registering around 6% over and above the last year. Total assets is 101 billion. Loans and advances is around 63 billion. Investment portfolio is around 25 billion. Customer deposit is around 50 billion. The overall return is around 5.2%, and return on assets is around 0.7%. We have declared a dividend of 7.5% on a conservative basis, even though the earning per share was high, nearly at 2 riyals. We gave only 0.75, only to make sure we still maintain the highest capital adequacy. The capital adequacy is high, and the overall CET is high, and the Tier 1 is also high. Net interest margin is highest in the country among the banks, and we also managed to bring down the cost-income ratio to 27.8% as against 28 plus last year. So overall, if you look at the big picture, we managed to have stability, conservative and provisioning, and healthy cushion. That's what we managed to articulate. If you look at the profit breakdown, if I analyze the the overall profit. Net increase in interest income due to drop in interest expenses around 266 million. Commission fee almost flat. Forex income is 48 million, more than previous year. Income from investments have come down. The capital gain which we had in 2020 is not there. We are down by almost 150 million. Loans and advances, we booked both the years. COVID years, we thought we will put the maximum to take care of the counterparty issues and the cross-border issues and also the local issues. Increase in impairment on financial assets, if you look at it, that's also we have taken 118 million. Reduction in the impairment of investments, 48 positive. Surge in the net profit before tax is around 41. Now, year on year, net of tax, if you look at it, it's flat. Now, if you look at the initiatives for 2021, we issued Doha Pay Wallet, introduced that. We also have biggest cash prize, we announced initiatives. We went on showcasing sustainability and bagging recognition from Golden Peacock. Bond issuance, we did it, a very strong investors response last year, March. We got cost-effective funding. And again, we are the first bank in Qatar to launch a full suite of Visa corporate card solutions. We did bilateral relationship knowledge management sessions and client interaction for South Africa, Sri Lanka. Again, Qatar itself, we showcased to the rest of the world private banking opportunities, treasury, China, Australia. We also brought in the FinTech Summit, new Visa Signature and Visa Platinum credit cards, and also robotic process automation, more than anything else, robotic process automations. We did also showcase the opportunities between Qatar and US, India, cyber security we did it, and we also did a 3-year syndication successfully on 20th December, substantial amount. When it comes to other banks, Qatar National Bank reported 13.2 billion, 10% growth. All-round performance. Qatar Islamic Bank 16%, 3.55 billion. And the QIB is around a billion. CBQ 2.3 billion, 2.3 billion. Al Ahly Bank Qatar 713 million. Masraf Al Rayan is also an opportunity. If you look at it, they've taken precautionary provisions to the tune of, extraordinary provision they have taken, and compared to the previous year, they have absorbed additional provisions. The profit reporting was 1.78 billion, 21% less compared to the previous year. If you look at Emirates NBD, 9.3 billion with 34% growth. Income boost was accredited to high retail volumes that offset the lower interest. Bank Muscat has showcased 189.6 million Omani Riyal, that is 1.8 or 1.9 billion Qatar Riyal, 16% up. They have all-round growth in a way. National Bank of Kuwait has shown almost 362 Kuwaiti dinars, that is 47% up. Let's talk about the overall market momentum. Qatari banking system, banking sectors, if you look at it, lending growth, nearly 9%. Government sectors, 2%. Real estate, 5%. Consumption, 9%. Contracting, 11%. Services, 15%. Trading, 11%. Deposit growth, nearly 8%. Qatar as an economy is going to report overall economic momentum this year over nearing, I should say, according to IMF is 181 billion. It's nearing 200 billion. I'm sure they will be in a position to respond. And current account will be a surplus over 30 billion, and population is still holding at 2.8 million. Gross debt has come down to, if you look at the overall trend, gross debt to GDP is around 53%. They have almost around 350 billion gross debt. As far as the oil price is due for hitting $100. We have seen the reflection in the geopolitical tension. We also seen Iran is in negotiation, Ukraine and US and the rest of the allies, US allies, are in confrontation with Russia. So we have reasons to believe the economic momentum, which the oil price is lifting, the business as usual, we are witnessing. Qatar should grow 4%, UAE should grow 3%, Saudi Arabia nearly 5%, Oman nearly 3%, Kuwait is around 4%, Bahrain is around 3%. Inflation is a major issue. That's last quarter. The rest of the world also has seen, right from US 7.5%, now we are seeing 6.5% in Qatar. That's mainly on account of recreation and culture, transport, food and beverages. UAE is around 200%, and annual inflation in Saudi Arabia is around 1.2%. And then again, it is on transport, food and beverages, and overall the consumer retailing. Now, if you look at the Fed reserves, policymakers have signaled they will start raising the US interest rate from March to battle down the inflation, which is alarming now. 6 or 7 interest rate. In my personal opinion, 5 interest rate is definite. GCC central banks have to make their synchronized move, more or less. Those who are parity linked to dollar, their currency is parity linked to dollar. So not necessarily. Domestic side inflation they can monitor and leave in the gap. Then what impact it will have on the interest arbitrage, we have to look at it. Fed action could contribute to volatility in the Gulf market. With high oil prices and growth is expected to prevail, the money will come back to GCC market now. As far as Doha Bank is concerned, we will work on trade finance and non-funded incomes. Non-funded volumes we can focus on. Corporate finance and project finance, both are opportunities. Enhancing the relationship with the existing customers, new retail offerings by leveraging technology, offering for FIFA 2022. So, extraordinary opportunity will enhance our risk management and focus on lending in profitable sectors. We are evaluating various plans, multiple currencies, and will decide accordingly. So, plenty of opportunities for us to look at in strategic terms, how to synchronize with the change in business model, 5R as we said, restructuring, rationalization, revenue enhancement, remodeling of your business in line with digital convergence, and also remedial management. And we also have to focus on the overall resetting of the whole world, what impact it's going to have in terms of financial stability, in terms of the stocks, currencies, commodities, bond, all are at a defining moment now. Based on US interest moves, the rest of the market dynamics will change in terms of interest rate risk or liquidity risk, bond market, or for the matter equity market.